Well, what does all this tell us about where China's economy is heading? Well, let's talk about that now with Sarah Su, the CEO of China Rising Capital Forecast and a visiting scholar at Fudan University. Thank you so much for joining us.
Thank you.
So obviously a lot of data there. What does it all tell us about the overall health of China's economic recovery?
Well, there are some really encouraging signs. I mean, in the past, we've seen the pickup in terms of production and manufacturing, but even as of last month, there was still a worry that China was not consuming enough, that consumer demand simply didn't seem to pick up enough in order to consume all of those products they were making. But thankfully, this month things started to look better. This month marked the biggest uptick since December of last year in terms of growth of retail sales. And that's a really positive metric. I think people have been wondering what would happen with that. It looks like it's coming back. The manufacturing is in place. Looks like exports are also picking up. And it seems like China is on the road to recovery.
And as you mentioned, this turnaround for consumer demand in August, and we know that September is China Consumption Promotion Month, and that's also going to cover the Mid-Autumn Festival and to the China National Day holiday. How much is this momentum expected to boost consumption going forward?
I think it's really going to pick up in the fall, especially when China has its National Day week of holiday. And I think that, the outlook is relatively good. Interestingly, we've seen luxury sales performing well, even during the downturn as people started spending more money on themselves instead of being able to take a vacation and so on. But it looks like the consumption of regular goods is starting to rebound, and that's a very positive thing.
And certainly Prada is predicting that its China business is going to pick up quickly this year. Why has the luxury sector had such a strong comeback in China?
Yes. Well, I think, like I mentioned, a lot of people were not able to go on vacation or to, spend on other people because they were social distancing. But it looks like people really did spend on luxury products. They weren't able to buy them overseas, which they usually do, but they were purchasing them either online or going into shops and purchasing them in person, which is a really good thing.
And you touched on industrial production. We know that continues to rise. We're also seeing China's producer price index stabilizing in August. How much of a foundation will that be for further recovery and growth going forward?
It creates a pretty strong foundation. We see that things are recovering on both the supply and the demand side, which is what we look for as economists, to look for some sort of economic stability. It looks like that fixed asset investment is also starting to slow down in terms of its decline, and it looks like it's going to start to come back as China continues to up its potential infrastructure investment in the next few years. And so that's going to really help to drive further manufacturing, which will help create jobs and also boost consumption.
And how important is that infrastructure investment going to be in terms of China's growth, say, not just in the short term, but say for the next 5 to 10 years?
It's pretty important. Right now, China is trying to build up a digital infrastructure, which is going to be key to its ongoing growth in the short to medium term. And so not only is it bolstering the economy, which is what the government had intended in part for it to do, but it's also going to help China create a base for having that infrastructure in order to grow more companies and boost entrepreneurship. And really continue to go down the line of becoming a more service-based, a more high-tech, manufacturing-based economy.
So then, in terms of foreign investment, you mentioned tech. Is that going to be one of the sectors that are going to be easier to attract more foreign investment, and what are some others?
Yeah, so China has had a negative list, which has gotten smaller in terms of industries that it does not allow for foreign investment. That has shrunk in recent years. Now it actually has an encouraged list. And on that list are, companies coming in for high-tech investment, other types of, more investment-heavy service types of production. So this is going to help China to reinvent its economy to become less labor-intensive manufacturing to more high-tech manufacturing and service-based economy, which is where it wants to be.
All right, thank you. Always good to have you on. Sarah Su there, CEO of China Rising Capital Forecast and a visiting scholar at Fudan University.